Seniors claim your $4,873 IRS refund before it is too late. And I get why that grabs attention. Nobody wants to leave money with the IRS because a form was missed or a deadline passed. But I want to say the careful version. Right away, there is no automatic $4,873 refund waiting for every senior. That number may be an example or an average from a specific data set or a marketing hook, but your actual refund depends on your return, your withholding, your credits, your income, your filing status, and the year you are trying to fix. So the real question is not, does the IRS owe me exactly $4,873? The real question is, did I fail to file a return, miss a refundable credit, over withhold taxes, or skip an amended return before the refund deadline closed? That is the useful version. The first group is seniors who did not file at all. And this happens all the time. Someone lives mostly on Social Security. Maybe there is a small pension. Maybe there is a little bank interest. They assume, I do not owe tax, so I do not need to file. And sometimes that is true from a filing requirement standpoint, but owing no tax is not the same thing as claiming every refund. If federal tax was withheld from a pension, an IRA distribution, wages, or Social Security, you generally have to file a return to get that withholding back. The IRS says if you are due a refund for withholding or estimated taxes, you risk losing it if you do not file within the refund claim window. So the first check is simple. Did you file for 2022, 2023, 2024, and 2025? If not, pull your tax documents and check whether any money was withheld. SSA 1099, 1099R, W2, 1099 INT, 1099 DIV, brokerage forms, anything that shows federal withholding. If there was withholding, there may be a refund. Not guaranteed, but possible. The second group is seniors who had earned income but never checked the earned income tax credit. EITC is a refundable credit. That means it can create a refund, even if the tax owed is low. But the rules are specific. Social Security does not count as earned income. A pension does not count as earned income. IRA withdrawals do not count as earned income. Earned income usually means wages, self-employment income, or other work income. So if a retiree had part-time work, self-employment, consulting income, or a small job, EITC may be worth checking. But if a senior had no qualifying child and was age 65 or older, the age rules can make EITC unavailable. That is why I would not guess. Use the IRS EITC assistant or ask a tax preparer to run the actual calculation for the exact tax year, not this year in general, the exact year, because EITC limits change, investment income limits change, and dependent rules matter. The third group is people who may qualify for the credit for the elderly or the disabled. This is Schedule R, and this is where I want to correct a common misunderstanding. Schedule R is not usually a big refundable jackpot. It is generally a non-refundable credit. That means it can reduce tax you owe, but it usually does not pay you more than your tax liability by itself. So if someone says every senior can file Schedule R and get thousands of dollars back, I would slow down. Schedule R can still matter, but it has income limits, filing status rules, and reductions based on certain non-taxable benefits. Many retirees calculate it and get zero. That does not mean it is useless. It means you have to run the worksheet with real numbers. If you are 65 or older, or retired on permanent and total disability and meet the rules, it is worth checking, but I would treat it as a possible tax reduction, not a guaranteed refund check. The fourth piece is amended returns. This is where deadlines matter. If you already filed a return and later discover you missed a credit, deduction, filing status issue, or withholding amount, you may need Form 1040X, amended U.S. individual income tax return. That is the normal IRS form for correcting a filed individual return. But the refund window is not unlimited. The IRS generally gives you 3 years from the time the return was filed, or 2 years from the time the tax was paid, whichever is later, to claim a credit or refund. For many people, that means older refund years can close permanently. So if you are looking back at 2022, 2024, or 2024, do not just think, I will get to it later. Check the deadline. A refund that is valid today can become unrecoverable later because the claim window closed. The fifth piece is the new senior deduction discussion. You may have heard about a temporary senior deduction for people aged 65 or older. This can reduce taxable income for some older taxpayers who qualify, but it is not the same thing as eliminating taxes on Social Security, and it is not the same thing as a refundable credit. A deduction reduces the income that is taxed. A credit reduces tax. A refundable credit can sometimes create a payment beyond tax owed. Those are 3 different tools. So if your preparer or software missed a deduction that might create a refund because you overpaid, but it does not mean the IRS has a fixed refund amount waiting for everyone over 65. Now here's the practical way I would check this. Start with your last 4 tax years. Pull 2022, 2023, 2024, and 2025 if it has been filed. If you do not have copies, use IRS transcripts or ask for tax records through IRS tools, and then look for 3 things. First, was federal tax withheld? If yes, was a return filed to claim any refund? Second, was there earned income? If yes, was EITC evaluated? Third, were you 65 or older, or permanently and totally disabled under the tax rules? If yes, was Schedule R evaluated? Again, evaluated does not mean claimed. It means someone actually ran the worksheet and confirmed the answer. If the schedule is missing, that does not automatically prove you qualified. It proves you should check. And if you find a real missed item, then you decide whether Form 1040X is needed. Now, do not do this from a random phone call. A scammer may call and say, the IRS is holding a senior refund, and they can release it for a fee. That is not how this works. The IRS does not call you out of nowhere to unlock a $4,873 refund. The process is filing the correct return or amended return with the correct schedules before the deadline. If you need help, there are free options. IRS VITA sites help qualifying taxpayers with free tax preparation. TCE, tax counseling for the elderly, focuses on older taxpayers and retirement-related tax issues. Those programs are worth checking before paying someone a large fee to chase a refund you may or may not have. So the plain English version is this. There may be IRS refund money that some seniors miss, but the reason is usually not one secret form. It is one of a few boring things. A return was never filed, withholding was never claimed back, EITC was never checked, Schedule R was never evaluated, an amended return was never filed, or the refund deadline passed before anyone looked. That is the real risk. Not that every senior has the same $4,873 sitting there. The next step is simple. Pull your returns. Check withholding. Check earned income. Check Schedule R. Check whether a 1040X is needed. And check the refund deadline before you wait another year. Because with tax refunds, being right is not always enough. You also have to file the claim on time.